Welcome back, traders. This is Mike Hamilton for Trade Easy Way. So, Fed are not going to raise rates yet until the job environment improves. So, the jury's out at the moment. So, the effect on the markets is to see some pressure, upward pressure on the dollar and upward pressure on the indices, because the indices relieve that there's no interest rate rise yet. Basically, the way I don't often talk about fundamentals, but let's just add a little fundamental talk into the beginning of this video. It's a battle between the pound and the dollar as to who raises rates first. Most likely it's going to be the US because they're 1/4% and we're 1/2%. So in the meantime, the Japanese economy is still trying to promote inflation and is getting there, but is not reaching targets. There's generally a lot of suppressed, limited inflation in the market at the moment, in the global market, hence the reason why rates are still staying at their historic lows for very prolonged periods. But okay, back to the charts. I like this pound yen a lot. And a sweep move to the upside. We hit the fibs and support. Got a very aggressive move to the upside, and now I'm hoping this is the cup and this is the handle. So I'm still long here. I'm slightly underwater with the position I took post Fed decision, and just looking, hoping that we're going to see a little pick up above at least 343.50 to see if we can get going into the Asian session and into the UK session. No UK data tomorrow, but what there is weekly US jobs and US GDP. Not much else, so may see a sluggish Euro session and more opportunities of volatility and movements as we get into the US session and past that data point. So that's the pound yen. Let's look across the other couple of other yen pairs. And of course, the euro, on the other hand, is in the midst of a lengthy quantitative easing program. So Central Europe isn't going to see a rate rise for who knows. They've got to stop quantitative easing, which is at the moment projected to be about 12-14 months from now. Wait until the market settles back and gets used to not having quantitative easing, and then think about rate rises. So Europe could well be some time off, good 2-3 years off of rate rises. In the meantime, this euro yen is pinned back under the weight of this level here, 137. This could roll over now. If we stay in this apex and break down under 135, which we're of course not that far off, this could potentially roll over and this could become a wedge breakdown. In which case, let me take this top off, because at the moment we don't have any until we close above 137. That doesn't stand much chance of pushing higher. So we've got a cluster of moving averages underneath us. We've got a little knot of moving averages underneath us. So yeah, let's see if we hold it and break above that 137. But in the meantime, be careful. This could go either way at the moment. Let's look at US dollar yen. This is much more interesting. You can see the 76.4% fibs. We close above this today, then this is potentially a good one for a pullback tomorrow, because what I'm looking for here is, so we've got a couple of days at higher closes, bumping into a lot of resistance, yes. Oops, that's no good. Bumping into a lot of resistance, but all the time we're above this 20 EMA, I would buy a pullback with a relatively tight stop at 320, about 320 area. Try and get a pullback to about 350, 370 if it lets us tomorrow, and then see if that can push higher. So US dollar yen is potentially my favourite chart. Let's just finish looking through the charts then. Right, dollar pairs. Euro US. I talked about this channel over the weekend. So we pushed into this 100 EMA. At the moment we are coming off. We're closing underneath this big fire line here, this does potentially open the gates for at least a pullback to this level here. And in which case, if we get that, any bounces to be shorted could potentially wind our way back to parity. Like I said, if the Eurozone is unlikely to see rate rises for some time, that close could be a very good signal for us to get short and see if we can ride this down over a period of time to get to parity. I would just add that all the time we're sitting on, okay, we've got a big fire line here we close underneath, but until we drop under this Monday's open, it says that the bulls are just hanging on. The Euro bulls are hanging on, but the Euro bears are sniffing around and could try and force the issue. Quick look at oil, because oil has seen a pickup here. The bearish trend is still intact, and I think any pullback to this resistance area, which is 50.70, is to be sold into. Gold. This is a huge trend line down here that we are seeing at least a holding pattern. All the time we're holding down here, we could find more and more buyers and push that up. But I think the same goes for oil. This is, to me, a bearish consolidation. Any attempt to get back to 11.20, I think we'll see the sellers come back in and we retest that 20 EMA, and then we'll get potentially another leg down. We haven't talked about the Dow, so let's just look at this. Obviously, you can see, plain to see, we've come off a key support level and fib level. At the moment, we are bumping into a lot of congestion. So unless we can close above 750, 800 tomorrow, I would suggest that could roll over, and GDP and jobs could be the trigger for this to break through that. It's going to need a lot of force, a lot of will from the bulls to secure that push up. At the moment, it looks as if that could happen, but any sell signal here, if we push up and fail and end up sitting around the 800, 750, 800 mark, I would look to short any highs and see if we can start to wind our way down to the 50%, which is just above 17,000. All right, I'll leave it there and update you on stocks tomorrow in the room, and see you at the next update. Thanks for listening.